Step-by-step guide to investing your first $1,000 in 2022. Did you know who is the fastest self-made billionaire ever? It was Jay Walker. Guess how long did it take for him to become a billionaire? It took him less than a year. Crazy, right? During the dot-com bubble, he founded Priceline.com, which caused his net worth to soar from zero to billions. And fortunately, his membership in the Billionaire Club didn't last long. A year later, the dot-com bubble burst and his net worth fell. Unlike Warren Buffett, even though it took him 55 years to become a billionaire, he is still a member of the Billionaire Club today, and it doesn't seem that he will be evicted anytime soon. And that's the kind of status you want to have. Money is a difficult game to play. It's taut, brutally competitive, and you can succeed if you don't know the rules. The issue with most people is that they may put in a lot of effort throughout their entire lives, yet they still end up in poverty because they lack the knowledge of how to allow their money to generate even more income. In other words, they lack investment knowledge. However, how you invest your initial $1,000 is the question. In this video, we are going to answer this question. Hello there, this is a Financial Fortune. In this video, we are going to give you a step-by-step guide to investing your first $1,000. Before we start, don't forget to leave a like, click the subscribe if you haven't already, and hit the notification bell to be notified whenever we release new videos. Investing your first $1,000 can be hard. Do you invest in stock market or in real estate? Which types of stocks do you purchase? Is $1,000 sufficient to begin investing? Consider this example to gain a better understanding of what investing is and how it works. Let's imagine you put in a lot of effort and save $300,000. You could go to a Ferrari dealership and buy a luxurious car to show off your achievement, or you could buy real estate and rent it out. You will receive at least $2,000 per month. You can sell it and recoup your initial investment if you decide you no longer want to obtain that $2,000 income each month. In fact, your investment's value might even increase, resulting in a price increase when you decide to sell it. And that is how money makes money. But $1,000 cannot be used to purchase real estate. Even if it wouldn't be enough for a down payment, you could still put that $1,000 into other investments and watch it grow. The simplest method is to just deposit it into a savings account and earn interest. But why would the bank reward you for doing so and not charge you instead? You see, the bank will take your money and lend it to someone else at a greater interest rate, and it will split the profit with you. Briefly, that is how banks operate. The main issue with this tactic is that it isn't profitable because of the extremely low interest rates on deposits. The highest rate you might likely get is 0.8%. This means that if you deposit that $1,000 into savings account, you will get an additional $8 in 12 months. This is incredibly low considering the Federal Reserve targets an inflation rate of 2 to 3%. If the growth of your money is within this inflation rate, or it does not achieve at least this rate, over time the real worth of your $1,000 will decrease, meaning you will be able to purchase fewer things annually. What is your insight about this? Do you think it is worth it to save all your money in a bank? Comment down below and don't forget to hit that subscribe button if you haven't already. But really, why are deposit account interest rates so low? The pandemic compelled the Federal Reserve to lower interest rates this year, which is encouraging people to borrow money and spend it. Once we recover from this crisis in a year or two, the Federal Reserve will raise interest rates to 1, 2, or possibly 3%, which will result in an increase in interest rates on savings account as well. So hopefully, everything will get back to normal so that there would be higher interest rates. But again, you should also consider the inflation rate. Do not only invest or save your money in a bank. Buying government bonds is your second choice in investing your first $1,000. A government bond is a security that the government issues to raise capital to fund expenditures. If the government decides it needs to build a school but lacks the funds to do so, it may issue an IOU, a document that states that the U.S. government owes the owner of the security the sum of the security's value plus interest. Although this example is obviously oversimplified, the main idea is nonetheless conveyed. Since interest rates have been so low this year, government bonds are less than 1%, although they were as high as 3% 2 years ago when interest rates were also high. Considering that government bonds are the safest investments you can possibly make, this is not a terrible thing. Any investment has a certain level of risk. What are the possibilities that the US government would not repay the loan that you have made to it? The failure of the US economy as a whole may be required for the US government to become bankrupt. Because of this, US bonds are regarded as the world's safest investments. However, you should think about investing in the stock market if you want to earn a bigger return like 10, 20, or 30%. For instance, just this year, the stock price of Amazon rose by more than 80%. The price of Google stock increased by close to 30%. The value of Tesla stock rose by 721%. Yes, you heard that right, 721%. Then, why would anyone invest anywhere else when they could potentially triple or even double their money on the stock market? The answer is risk. For instance, there isn't much risk when it comes to government bonds. In fact, it carries little risk. However, there is a chance that a specific firm could collapse or disclose poor financial results, and pretty much any unfavorable news can cause the stock price to fall. A product might be introduced by the company, and if consumers don't like it, it could result in some bad press which could cause the price to drop. As a result, larger returns come with greater risk. Remember, higher risk brings higher rewards. Apple is a firmly established business with significant lower failure risk than Tesla, but it also has less room for expansion than Tesla. As a result, Tesla grew by 721% this year while Apple only increased by 70%. How much risk you can accept without going crazy is something you have to decide for yourself. If you have only $1,000 left, it might not be a good idea to risk it all because you could lose the majority of it if things don't work out. Only invest what you are willing to lose. Consequently, investing in an index is one approach for investors to reduce their stock market risk. An index fund like the most popular one, S&P 500, would essentially invest in these top 500 US companies as it monitors the 500 largest US corporations. While some of these businesses will undoubtedly fail, others will prosper. According to past data, the S&P 500 return rate has generally been around 10% since the 1920s. As a result, purchasing a share of one of these index funds entails purchasing a small share in 500 of the largest US companies. However, how can one purchase shares in these index funds? Where exactly do you begin? You must first select a broker. This person is qualified to sell you stocks. In the past, you had to pick up the phone and dial the number of the broker to request that he sell you some shares. Do you recall the Wolf of the Wall Street? He would make calls all day long trying to sell people worthless stocks. Thank God, however, that it is the year 2022 as conditions have greatly improved. Brokerage companies developed apps like Robinhood, Webull, and others so that you can purchase shares from the convenience of your smartphone. You can start investing immediately after downloading one of these apps and creating an account. Starting to invest can really be challenging. You will have a million questions about where and how to invest. Most likely, the answer to your questions is that there is really no right or wrong answer. I mean, if we are really talking about where to invest your money, this depends on your strategy on how you are going to make your money grow. It is your money and your future that we are talking about. That's why it is very crucial for you to study first the financial market and the investment options available. You can also consult a professional first before making a big investment decision. If you can just hire someone to help you in your first and possibly next investments. That is it for today. This is the Financial Fortune channel and thank you for watching.